I just logged into YouTube. Y'all pull up on YouTube. I'm about to do a what's up flicks on me. Y'all pull up on YouTube. I just logged into YouTube. I just jumped on here to let everybody know, cause that's where everybody be. Everybody be over here. But all I need is one person on YouTube, and I'm gonna do what I do. You feel me? Everybody that's joining at youtube.com/slash the new TLR. If you ain't subscribed yet, youtube.com/slash the new TLR. If you're not subscribed, go over there. And I'm eating. Yes. Again, youtube.com/slash the new TLR. Let's get it. That's it. Cedric Watkins in the building. I'm gone. I got one person. I'm about to get it. Go to YouTube. All right. What's happening? What's happening for everybody that's pulling up, and get this out the way. Let me put my phone on the charger because it's dying, and we're gonna get into it. All right. So, lunchtime lesson. What these lunchtime lessons are for? It's just pretty much I break down my mindset. What's happening? I break down my mind. Is my mic on? My mic on? Can y'all hear me? Somebody put one in the chat. I want to make sure I want to start running my mind. All right, let's do it. All right. I see the one. Let's get it. And y'all know how to deal with the smack in the day, because I ain't going to eat my food cold. So, what the lunchtime lessons are all about, you know what I'm saying? I ain't saying I'm the best trader in the world. I ain't saying I know everything, but I know when I was first starting out, it's like I always like had questions about, am I doing this right? Am I doing this wrong? What other people doing? What other people thought process is? So I just try to share my thought process and why I do what I do, why I get in the trade, why I get out the trade, why I skip the trade, and I try to do it all in real time. I try to share it through the stories, but the stories be taking so much time. So what I try to do, even if I don't get, like yesterday, I got into a sim trade that actually turned out to be more than my risk tolerance. And so I got stopped out of the trade because it was more than my risk tolerance. It went where I thought it was going to go. It did everything I thought it was going to do, but the risk to reward wasn't enough for me, and I got stopped out of the trade in the sim trade. I told what I would have done to not take any loss and save a little bit of profit if it was a live trade, but I don't want to get on here and just be like, hey, I'm hitting 50 pieces, I'm hitting this, I'm hitting that, and never show the other side. Cause shout out Lex. She showed the good and the bad. She show you she made, you know what I'm saying, 9 out of 10 trades. Or she show you, you know what I'm saying, she had a profit target of 40 points and got stopped out with one tick. She don't always just glorify the good. And I think that's really important in the community. So I'm gonna stop running my mouth and I'm gonna get into what I was looking at today. I'm gonna go all the way back to the beginning, my thought process last night before I went to bed, this morning when I woke up, and what happened while I started trading. So let me switch this over. Desktop. What is it doing? Why is this not working? What's going on? Hold on, y'all. Y'all bear with me 1 second. Why is this not switching? Is it something? Oh, my Wacom tablet was on the keyboard. I'm sorry, y'all. Okay. There you go. My Wacom tablet was pressing on the keyboard so it wouldn't recognize nothing. All right, here we go. All right. For everybody don't know, hashtag Spider Gang. All I watch is, let me get over here so you can see me. All I watch is the ES in the SPY, right? So here we go. We're looking at the ES. I'm gonna go up to 60-minute candles, and I'm gonna explain why I got everything I got on the screen. Okay, this the MES over here. Let me copy these 2 boxes because I was about to trade the MES today. So let me copy these 2 boxes over to the ES where all of my lines are, so I can break it down for you, and hopefully they go right into the right spots and I don't have to adjust them. Okay, here we go. So this is a 60-minute chart on the ES, right? Looking at the 60-minute chart on the ES. So, all right, let's start out from last night. I'm gonna hide this line right here. Apply, boom. So last night, if you was tapped in yesterday, y'all know this green, the arrows on. I got the arrows on. I ain't got the lines. You like the arrows, all right? So if you was tapped in yesterday, you know this green line right here was a little further down. I think it might have been like down here somewhere. I can't remember exactly where it was, but this was my line that I was looking to go long off of down here after it had went and got liquidity, right? After it had went and got liquidity, this was the line that I was looking to go long off of. No, this was the other day. Monday. It was down here somewhere, and I was looking to go long, and then this red line was the area I was looking to get out of that trade on Monday and take a temporary short, right? And then so this is the line I was looking to go long off of yesterday. I didn't even move the line. It was the same liquidity pool. I was looking to go long off of that. That was the one where the trade was outside my risk to reward, and I got stopped out. Do you have a lifetime license to ninja trader? Yes, I do. I got a lifetime license to ninja trader. So this I went long off here. That's the one we covered yesterday. So then what I did last night, right? After, if you notice, right, when we what we did yesterday, let me shrink this up some. Hopefully you can pay attention. So yesterday from, you know what I'm saying, from Monday afternoon to Tuesday afternoon, let me change it back to the arrows. Let me change it back to the arrows. Boop. So from Monday afternoon right here to Tuesday afternoon right here, we just consolidated in this range, right? And then once I move this green line, blue line, whatever it is, above here, I was moving that to say, okay, if I'm expecting this to come back down to here, and I'm gonna try to take a buy off it. I'm thinking like throughout the night we might trade back down to here, take a buy off it, because we made some, pretty nice gaps at the end of the day on the hourly counters. We made a pretty nice gap right here, made a pretty nice gap right there, and I'm gonna blow it back up. I just got this shrunk down so y'all can see what I'm talking about real quick, right? So that's when I noticed we was just consolidating right up under this area here of liquidity, right? And what I noticed about it is when we broke down here, we never really tapped this liquidity for real. You see what I'm saying? So, and the reason why I say that, cause back here, when we made this low here, we went up, traded up, and we never came back down below this area here. We stopped there, right? Which was just below this area right here. So we stopped there and we blasted off, made all-time highs, right? And around January 4th, when we start falling again, we never got back to this area until, right, I got to go to my line so I can see the date, until right around like the 19th or the 20th, somewhere around there, right? That's when we got back to that area, but we never broke below this area. And then we went up, and when we did break below it, we blew past it. We blew past that area and came below these lows, right? So after we dipped down here, got all this liquidity from way back in July, June, we came back up to here, and we just consolidated right here for like a day and a half, just soaking up this liquidity right here. Then at the end of the day, boom, we blast off with force. And let me show you them hourly candles, right? So them hourly candles, we made a nice gap right here, and then we made a small gap right there, right? So I'm thinking in my mind, overnight, we gonna trade back down to here. So when I woke up this morning, lo and behold, the lowest we had come was right here. That's why I put, let me put that other line back on, right? Where is it? Right there. All right, so that's why I put that line in, because that's the lowest we had come down to and started trading back up, right? We came down here, then we blast off, and that's the 5 o'clock candle. So at 5 o'clock, we closed right here at 5 o'clock in the morning, and then we just hovered around up in this area, and then once the market opened, that's when we started coming back, selling back down to the area I was watching to try to take a long position off of based off what we did overnight, right? So this was my initial thoughts before I went to bed, and then when I woke up, I saw we just consolidated overnight, blast off real hard, killing this hourly swing high right here. You know what I'm saying? We got an hourly swing high. Let me go back to my arrow. We got an out. Let me make this a little bit bigger, right? So we got an hourly swing high right here, an hourly swing low, and we blast off and like killed it with some authority, right? So that's why I put this line right here to be looking to take a long off of, right? And so let me drop down to my 15 minute, right? So once the market opened up right around, all right, this the 9:30 candle right here, right? This the 9:30 candle right here. Once the market up, we kept trading down into it. Boom. Once we went into it, you know what I do? I drop down to my 2 minute once we get into the liquidity pool, right? Once we get to the liquidity pool, I drop down to my 2 minute. Where did I just go? There I am. Okay. So drop down into my 2 minute. Can y'all see my box there? Is that box too light? Let me darken that up a little bit just in case y'all can't see that. Can y'all see that box better now? Yeah, so I'm looking at that, right? That was so once we dropped into the liquidity pool, I'm on my 2 minute. So now I'm watching now. Here we go. We going up and down. Everybody know my steps by now. If you don't know my steps by now to my trading strategy, it's got the dip into the liquidity pool, right? Right. Once it dip into the liquidity pool, I drop down to the 2 minute and start looking for a swing high and swing low to form, right? So we dip into the liquidity pool, right? We going, right? We got a good swing high here, right? And then we got a swing low here, right? And then we blast off with authority, right? So swing high form, swing low form, then we blast off, we break the swing high with authority, and then the very next candle created a fair value gap, right? That's why I got it marked there. So now the steps are complete. Now I'm looking to take my trade. I go from the bottom of the fair value gap 3 ticks up, right? That's my first place of trying to get the entry, right? If we got like an order block that's in the middle, I'll be watching that order block. I take whichever one lowest, right? So here, looking at here, the order block is down below there. So I'm going for the 3 ticks off the bottom of the gap, right? Once we got here, it started trading real funny. I didn't like the way, cause the way this blast off right here, we shouldn't have started getting this little consolidation straight to the side like that right there. Cause these 2 minute candles, so we, with all of this force, we need to be moving and making some real decisions. You see what I'm saying? Once we make this fair value gap, we should have dipped down and took back off with all that force. But since it started trading sideways like that, I said, hold up, this don't look right. This don't look right to me. So what I did, I went up to the 5 minute. I jumped up to the 5 minute to look at what it was looking like on the 5 minute, right? So on the 5 minute, we would be, right, let me get that exact time. Hold on, let me go back to the 2 minute real quick, get that exact time. All right, so this would be like 10:00, like between 10:05 and 10:10, right? Jump up to the 5 minute. So 10:05, 10:10. So let's look at the 10:10 candle, right? This the 10:10 candle right here. Looking at the 5 minute, right? I saw that we hadn't even formed a good swing high after we dipped into the liquidity pool. Looking at the 5 minute. The 5 minute is a higher time frame. It got like a higher precedence. You know what I'm saying? What my son texting me? We see your teacher doing. Oh, that ain't nothing I need to look at, Chris. That ain't nothing I need to look at. Oh, okay. All right. It's like a higher time frame, and we hadn't even formed a good swing high, and that's when I noticed, right, the highs are getting lower. You see what I'm saying? This swing high is lower than this swing high. I'm like, okay, let me chill out for a minute and see how this play out on the 5 minute, right? So I sat here and watched the 5 minute. It formed a swing high, but lo and behold, these swing highs getting lower and lower, right? These swing highs getting lower and lower. The swing lows, this swing low, this swing low, this swing low. The swing lows are getting lower and lower. And what does that mean? Lower highs, lower lows. That means you're in the midst of a temporary downtrend. So that's when I was like, nah, it went a temporary downtrend. I ain't bullish no more, and it's not rocketing down. So I'm finna sit on my hands. You feel me? Right? And so I got another box over here. And the reason why I got that other box over there, because looking at it here on a 5-minute time frame, we have formed the swing high. We had formed the swing low with some pretty good rejection, right? And so when we was coming up, we was looking like we was getting ready to break this right here. It wasn't breaking with no real authority, but we broke it, right? So since we broke it on the 5-minute, right, I dropped back down to my old faithful 2-minute, right? I dropped back down to my old faithful 2-minute to see what it was looking like, right? And what it was looking like here, we got here and I looked, and the green, we had broken with authority on the 2-minute. So I was like, okay, let me see if this candle gives me a fair value gap. When I made this box, the wick of the candle, let me go back to my arrow. When I made this box right here, the wick of the candle was right at the top of where that box is. So I was like, okay, I want to see if it forms a fair value gap. And like if we gonna go to the upside, right? It didn't give me a fair value gap. That's when I said, it's a wrap. It's a wrap. I'm done. I ain't even trying to trade. And the reason why was because it was almost deep. See, at the end of this yellow line, this red line, I don't trade after that in the morning time. That's the 11 o'clock. I stopped trading. And if I'm not already in a trade, I don't get in a trade after this time until the afternoon if I want to come back and get into a trade. So that was my whole thought process of, you know what I'm saying, what I was bullish on today. I set it up. That's what it was looking like. So it's not all about, right? It's not all about just like pulling the trigger blindly. You know what I'm saying? You want to think about it. You want to, you know what I'm saying? You want to check your surroundings, do everything look good, then pull the trigger. You know what I'm saying? Every step of my setup was in place, right? But it started looking funny. It started consolidating at the top of the box like it ain't want to come back down and like fill that fair value gap immediately and going back up. That's what had me concerned. I'm like, why is it stopping and consolidating here? You know what I'm saying? And if you don't know, for anybody that don't know, on my chart, that yellow line right here, that's the 12 o'clock open. And that red line right there, that's the London open. You know, on my chart. So it was like, it was flirting around with this. And the 12 o'clock open, that's like the first price of the day. You know what I'm saying? That's what the buyers and the seller agree on. This the first price of this day. You know what I'm saying? That's an important price to me. You know what I'm saying? That's where they starting the day off at 12 o'clock in the morning. This the first price that everybody say, okay, this is a fair price. Let's trade. You know what I'm saying? So that's why I was like looking at that. Could I have, you know, switched my mind and look for a short? I probably could. But like I say, I was bullish on the day. I don't like trading against the flow of traffic. We gapped up. We gapped up on the day. You know what I'm saying? So it's like so, and I was bullish. So I'm like, all right, I don't want to go against the grain. I already looked for my setup to the upside. I'm just gonna call it quits. I'm gonna sit on my hands. You ain't got to trade every single day. You ain't got to trade every single day. And let me show y'all something real quick. If anybody got any questions while I pull this up, y'all go ahead and throw them in the chat if you got some questions. If y'all got any questions, y'all go ahead and throw them in the chat while I pull up this right quick. I want to share something with y'all that I've been back testing and done put into effect. There it is. Oh, I still got the camera on me. I ain't even showing y'all. Okay. Boom. Y'all check this out. So what this is, right? This is Like I've been doing back testing, as you can see. I've been doing back testing on what's more profitable when I buy, like when I'm buying the strike, when I'm buying the strikes, right? What's more profitable, right? So this right here, this is a live trade that I'm actually in, right? With a 450 call on the SPY. I got into the position on 128, which was Friday, right? Lunch, I got a sausage, egg, and cheese sandwich that I made. So what I've been backtesting is what's more, what yields the better return on investment. Because anybody that's been following me, they know. Excuse me, y'all. Let me stop chewing. Anybody that's been following me, they know that I've been team at the money. And the reason why I was team at the money because, you know, I hear everybody say just go ahead and pay more money and get it at the money. You know, it lowers your risk. Yeah, it lowers your risk. You know what I'm saying? Cause it's, you know, it's you ain't asking the stock or the ETF to do something that it hasn't done. You know what I'm saying? All that stuff, I get all that. And some people say buy in the money, right? But for the SPY, based off my back testing, right, everything that I did from now on, I'm buying all of my strikes anywhere from 2 to 5% out of the money. You know what I'm saying? Depending on how much of a pullback that we have had, right? I got a text from somebody. I'll read that in a minute. Okay? Yeah. Yeah, that's a personal text. I'll read that in a minute. Right? So, 2 to 5%. Anyway, so looking at the chart, right? Looking at the chart, you can see at the time when I bought it, the at the money strike would have been $442, right? $442. That's where the SPY was trading at. 2% in the money would have been $434 strike, right? And all of these are for February 25th. The strike date is February 25th. And through all my back testing, if you look around, you see I done did all different. I did 0-day expirations, 1 week out. I've been out back testing at 3 months. I got like some 6 months. I got all kind of stuff, right? So, and then the 450 was the 2% out of the money. So based off my back testing, I bought the 452 that was 2% out of the money for $650 a contract on Friday. At the time when I bought it, if I would have got the at the money, it would have been $11.06 per contract. And if I would have got the 2% in the money, it would have been $16.10 per contract, right? So I track it every day based off of how that strike does every single day. So at yesterday, the highest the 450 strike went yesterday was 1075, right? The highest the at the money went was 1557. The highest the 2% in the money went was 2090, right? The last price that out the money strike, the position that I got, the last price it sold for was 1046. The last price the at the money sold for was 1557. It didn't move. It didn't sell any yesterday. It was the same price all day long, right? And the last price that same thing with the in the money. It didn't move at all. It was the same price all day. So it had no movement yesterday, right? So from the time that I purchased it on Friday up until close of business yesterday, if I would have cashed out at the max yesterday, I would have got 65% off of the out the money that I purchased. It would have been 41% for the at the money. It would have been 30% for the in the money. At the end of the day, the out of the money closed out at 61%. The at the money closed out at 41%, and the in the money closed out at 30%. And through all of my back testing, you know what I'm saying, as long as you get a good entry and follow your trading strategy, you know what I'm saying, because you know you got the direction right and all that. If you follow your trade strategy and it start going in your favor, you know you got a proper entry, the out the money, the 2 to 5% out the money has been yielding the better return on investment, because it was 61% versus 41 or 30. And this is for, I back test this on the spot. I ain't back tested on nothing else. If you want to do something like this right here and back test it on other assets, you know what I'm saying, for yourself, all these right here are these are a month. This is a month out. The thing up there say month. Last time I tested like a weekly. Last time I tested a weekly, I did a 5% out the money, and this was the that was the what's the name? Oh, and I just did it for over 1 day. Like if I bought a weekly over 1 day, this was last, and then I bought a 0 day, and 5% out the money was like way too far for the same day on the spot. That was like way too far. Like going, I would never go 5% out the money on the same day on the spot. But since I did 5% up here, I did 5% down there. And that's why the return was so horrible there, because that was just too, what they call like over leveraging. You know what I'm saying? That was just, I just wanted to see how that'll play out. You know what I'm saying? And then I got one over here. That was a 3-month. I used to have like a 6-month on here. Did I close it up? Yeah, I did. I closed it up. On the 6-month, on this one right here, the at the money actually was worked, but this was all for the same day. Like these out here, I just looked at it for the same day. It wasn't over multiple days. It was all at the same day. And then that's the only one where the at the money actually worked out better on that one there. And this one here, like the 2-year, these was like not moving. Nothing was like moving on those. That's why it, you know, that it ain't. I couldn't really get no good information on a 2-month. I mean a 2-year. So that's why I just started sticking to like the weeklies and the monthlies. I was doing, and then you see I kind of altered my chart here, where I can do like the high and the last of the day. You know what I'm saying? Because I wasn't doing all of that before, but once I got into a live trade, I altered my spreadsheet a little bit to include the high and the last of the day, so I could see what was the max on the day and what was the end of the day, so I could see if any of these popped up above it throughout the day. But it's still holding true that the out the money has been yielding the best return on investment on the spot. And until the data tell me otherwise, I will be just doing all of my swings out the money. I'll be doing all my swings out the money. Like 2 to 5% out the money. Anyway, I just want to share that with y'all. We got any questions? We got any question before I tap out? Any question before I tap out? Okay. Tasha, I got that text. If you still on here, I see the text you sent me. If you still on here. All right, man. I don't see no questions popping in. So I appreciate y'all for tapping in for another lunchtime lesson. Yeah, I got it. I'll peek at it in a minute. But yeah, I appreciate y'all tapping in for another lunchtime lesson, man. You gonna leave this up? Yeah. I got a playlist. I got a playlist on my YouTube channel, and it's called Lunchtime Lessons. Anytime I pop in to do lunchtime lessons, they're gonna be saved in that inside that playlist that say Lunchtime Lessons. I'm moving all the live stuff over to you. I'm really moving everything over to YouTube because I'm about sick of IG. I'm still gonna be putting stuff on IG, but because like the real, like for the reels and the stories and stuff like that, because on YouTube I can't do that stuff yet because I don't have enough subscribers. I only got like 300 some subscribers, and I think to get the community tab, I got to have at least 500 subscribers to get the community tab where I can post like stories and reels or whatever. So, you know, until I get up to like 500, I ain't gonna be able to do that stuff on YouTube. You know what I'm saying? And like I said, at the end of the day, it was just about like I was sick of IG excuse me, I was sick of IG because, you know, I had got to the point where people had started impersonating me. Then they had started, you know, DMing, you know what I'm saying, my family, DMing y'all, trying to, you know what I'm saying, swindle y'all. Talking, they got all kind of, I don't DM nobody. You know what I'm saying? I don't DM nobody. If you DM me and ask me a question, I'm gonna respond to your question. I don't DM nobody initiating anything. Like if you DM me, ask me a question and I respond. But if you didn't ask me a question and something come in from something that look like it's me, it ain't me. But anyway, to the next time, man. I appreciate y'all for tapping in. This been another lunchtime lesson. If y'all, you know what I'm saying, like these right here, y'all want me to keep doing it. You know what I'm saying? Like it, share it, subscribe to the page if you ain't subscribed. Cause I was looking at the analytics and it say a lot of people that watch it not subscribe. So subscribe if you ain't subscribed. Share it with your friends and family. My playlist, I revamped my playlist. It's one playlist that says Tim Tidbit Originals. That's the original 7 Tim Tidbit videos I did with my friends and family, showing how to do everything from beginning to the end. Like if you're a beginner, you don't know nothing, it start from open a brokerage account through fundamentals, technicals, putting it all together, options trading, portfolio management, through all them 7 videos. And then the other ones that say Tim Tidbit Live, those are the lives that I was doing like on Instagram and YouTube. And then um lunchtime lessons are like these lunchtime lessons that I'm doing. So it's 3 different um playlists that you can look at too to try to grab content. So just, you know what I'm saying, share it with your friends and family and tap in. You know, so I'm doing it all for the free ski whiskey. And in the comments down below, it's a link tree link to download the slides for Tim Tidbits. Like I don't have no slides for the lunchtime lessons, but for all the Tim's Tidbits that I do on Sundays at 3 o'clock, I have slides for them. And if you click on that link down there, and you'll see a link tree link that one of them say support my son video. Click on that, watch my son music video, and then the second one say download Tim Tidbit slides or something like that. If you click on that, you'll go to a Google folder and you can download all the slides for every Tim Tidbit that I have done from the beginning up until now. And it's all free. I don't need no email. You ain't got to give me no email. You ain't got to give me nothing. Just go to that link down below. And if you go on IG, the same link is in my Instagram bio, but it should be a link in the video down below. You can get that stuff. Anyway, man, till the next time.